Welcome to Talk Tickers. Today, we're diving deep into the latest earnings call from ARM, and, it was quite the period for them. Record-setting stuff. So let's unpack what's behind those impressive numbers.
Absolutely. ARM reported, a record-breaking quarter and fiscal year. For the first time, their Q4 revenue actually went over the $1 billion mark.
Wow. Okay, $1 billion in a quarter. That's a big milestone. And not just the quarter, the whole year was a record too, right?
Correct. Full-year revenue topped $4 billion. And if you look closer, their royalty revenue. That's the money they get when chips with their tech actually ship. That passed $2 billion for the full fiscal year. It really shows the scale of ARM's footprint,
Right. $2 billion just from royalties. And Q4 itself had record royalties.
Yep, $670 million in Q4. That's up 18% from the same time last year.
So what's that telling us? Strong underlying demand.
I think so. Here's something for you to think about. Even with economic ups and downs, the core demand for ARM's architecture just keeps growing. They're getting more earnings per chip. And at the same time, licensing. When companies sign up to use their designs, that hit an all-time high too, $634 million.
Okay, so both royalties and licensing are hitting records.
Exactly. Shows strong interest in their current and future tech.
And looking ahead, they gave guidance for Q1 of fiscal 26. What's the number?
Yeah, they're projecting revenue between $1.1 and $1.1 billion for Q1.
Okay, so staying above that billion-dollar quarterly run rate, what kind of growth is that?
At the midpoint, that's about 12% year-over-year growth. So it's still pretty healthy momentum. They're also forecasting really strong royalty growth for Q1, somewhere in the 25% to 30% range.
25 to 30% royalty growth. That's significant. Suggests a lot of ARM-powered stuff is expected soon.
It's a key indicator, definitely.
But interestingly, no full-year guidance for fiscal 26. Why do you think they held back there?
Well, that probably comes down to, the usual suspect. Global economic uncertainty. Things look good near term, but forecasting a full year out. Especially with trade stuff and everything, it gets trickier.
Makes sense. Okay, so let's really dig into what fueled that royalty growth. What were the big engines there?
It's fascinating, actually. It's like several powerful trends are coming together. First and foremost, it's the huge demand for power-efficient AI compute everywhere. From the biggest cloud data centers right down to tiny edge devices, AI needs performance, but it really needs energy efficiency. And that's, ARM's sweet spot.
Right. The AI angle is massive everywhere now. I also saw some pretty striking numbers on smartphones.
Indeed. You're seeing much broader adoption of ARM MV9. That's their latest CPU generation, and also their compute subsystems, the CSS, in phones. And get this, smartphone royalties jumped 30% year over year.
30%. Wow. How did that compare to actual phone shipments?
That's the key part. Shipments only grew about 2%.
Hold on. 30% royalty growth on 2% shipment growth? That's a huge gap.
Exactly. Here's the insight for you. ARM is capturing significantly more value from each smartphone being shipped.
So even if the phone market itself isn't exploding, ARM's piece of the pie per phone is getting much bigger.
Precisely. It's a clear trend. More value per ARM-based chip. And those compute subsystems, the CSS, are a big part of that too. They're pre-designed blocks, basically. They help customers build high-performance chips faster using ARM's latest tech, both in mobile and in the cloud, and ARM gets a better royalty for them.
And it wasn't just smartphones showing that strong royalty growth, was it? It seemed broader.
Oh, absolutely. It was strong across the board. Data centers, automotive, smartphones, IoT, all their main markets showed good royalty growth. It really underlines how fundamental and adaptable their technology is across different sectors.
Okay, let's switch gears to licensing then. What drove that record high number you mentioned?
Well, a lot of it was strong demand for that cutting-edge ARM v9 tech we talked about. Plus, licenses specifically tied to AI are becoming more common. A really interesting example they gave was a multi-year AI partnership with the Malaysian government.
Malaysia? What's that about?
They're aiming to build up an ARM-based AI ecosystem there. It kind of shows ARM is being seen as foundational for national AI strategies now, not just company ones.
That's a different angle. What about their contract values?
Their annualized contract value, ACV, that was up 15% year over year in Q4, right at the high end of what they've been doing recently.
Yeah.
So yeah, continued strong momentum in signing up new licensing deals. They also mentioned their customer base is getting more diverse, which is always good to see. Less reliance on any single player.
Let's zoom in more on this AI momentum. It sounds like it's absolutely central to their story right now.
It really is. ARM is quickly becoming like the go-to choice for AI in the cloud. They actually expect that maybe 50%, half of new server chips going into hyperscale data centers this year will be ARM-based.
50%. That's huge. That's a massive shift from the traditional server market, isn't it?
It's a sea change, and you can see it happening already. Look at NVIDIA, their big Grace Blackwell chip that's built on ARM v9. It's in full production now. Google's rolling out their Axion ARM v9 chips in 10 regions, talking up the price performance.
Okay. NVIDIA, Google, who else?
Microsoft's Cobalt 100, also ARM-based, is running major workloads for them. And Amazon, AWS, over half of their new CPU capacity they've added in the last 2 years runs on their own ARM-based Graviton chips.
Wow. So it's not just talk. The biggest cloud players are seriously committed to ARM.
Undeniably. And beyond just the cloud providers buying standard chips, there's this huge momentum in custom silicon. More companies are licensing ARM designs to build their own specific CPUs, GPUs, even MPUs and neural processing units.
Right. The custom chip trend. That helps both sides of ARM's business, I guess. Licensing up front, royalties later.
Exactly. They get the license revenue when the design starts, and then the royalty revenue when those custom chips actually ship in products down the line.
And AI isn't just for servers, right? You mentioned edge, and I think desktops and cars too.
You got it. NVIDIA's AI desktop, the GGX Spark. That uses the Grace Blackwell superchip, which has ARM v9 CPUs. It's getting traction with AI developers. ARM also just launched their first ARM v9 Edge AI platform. It combines a CPU and an NPU for AI tasks on smaller devices.
And automotive, that feels like a big potential growth area.
Huge. GM and NVIDIA are working together on ARM-based Drive AGX platforms for self-driving features. And crucially, ARM signed its first automotive CSS license deal with a major global EV maker. That's a big step into the core compute of future cars.
It really does sound like ARM tech is becoming embedded just about everywhere, from tiny devices to cars to the cloud.
It's a good way to put it. They also touched on their developer ecosystem, over 22 million developers now. And their core AI software layer, Collide AI, has passed 8 billion installs on ARM devices. That shows the software side is keeping pace.
Okay, let's circle back to the financials and the outlook. They gave Q1 guidance, but not the full year. What did the Q1 numbers suggest about profitability?
Well, alongside that $1 to $1.1 billion revenue guide for Q1, they expect royalty growth of 25-30%. They also guided non-GAAP operating expenses to be around $625 million. And non-GAAP EPS, earnings per share, they see that landing between 30 and 38 cents for Q1. Gives you a sense of the margin profile they expect alongside the growth.
So decent profitability expected even with that growth. And despite holding back on full year numbers, they sounded pretty confident overall.
They did seem optimistic, yeah. Their confidence seems to come from a few things. One, they have good visibility into what their customers are designing right now to the pipeline. Two, they have contracted royalty rates for a lot of those future chips already locked in. Three, that growing demand for custom silicon we discussed. And four, just the overall AI wave lifting everything.
Plus, they mentioned investing heavily in R&D.
Right, they plan aggressive investment in R&D, which signals they want to stay ahead technologically and capture these new opportunities.
Now, they did mention potential headwinds, tariffs, macro stuff. What was their take on the potential impact?
They expect a limited direct impact on their royalties and licensing from current tariffs. But they were a bit more cautious about the indirect impact. You know, if tariffs mess up supply chains, that could eventually hit demand for the end devices using their chips. Less visibility there.
Okay. And how are the different business segments holding up in this environment?
Interestingly, smartphones and the overall client business are still showing really strong royalty growth around 30%. Infrastructure royalties are actually accelerating, driven by custom silicon wins and also a recovery in networking gear. Automotive royalties are seeing strong double-digit growth. IoT is a bit slower, but still growing, still positive.
So that diversification across markets seems to be helping them navigate.
It appears so, based on their comments. They also specifically called out their data center market share accelerating, especially with NVIDIA's Blackwell using ARM. Looking ahead through their fiscal 26, they sort of guided sequentially. They expect royalty growth to be kind of flattish going from Q1 into Q2, but then pick up significantly in the back half with maybe 10-15% sequential growth in Q3 and Q4 each.
Okay, so expecting an acceleration later in their fiscal year.
That seems to be the projection.
Let's revisit those ARM compute subsystems, the CSS. You said they're becoming more important. Can you expand on that a bit?
Sure. First key point. All the CSS royalties are based on the latest ARM v9 architecture. That's the highest value stuff. They only really started recognizing royalties from CSS deals maybe 2 quarters ago, but it's already becoming more material, more significant in the mix.
And they expect that CSS adoption to keep climbing.
Absolutely. They see CSS adoption and the royalties flowing from it as a really key driver for future growth. And here's something important for you. The newer CSS deals they're signing apparently carry roughly double the royalty rate compared to just a standard ARM v9 license implementation.
Double the rate. Wow.
Yeah. And they also hinted that the second generation of CSS, which is coming, will have even higher royalty rates than the first gen.
Okay, so that's a powerful lever for them. Getting customers onto CSS means significantly higher future royalty per chip. How many customers are on board so far?
As of the call, they mentioned 13 CSS customers. It's pretty well spread out. About 6 in client, mostly mobile phones, 6 in infrastructure, like servers and networking, and 1 in automotive, that deal we mentioned earlier. Apparently, the whole chiplet approach, building bigger chips from smaller modular chiplets, is a big part of the value proposition for CSS. It gives customers more flexibility.
Okay, that clarifies the CSS angle. We've covered a ton of ground on ARM's quarter and outlook. Now let's shift to our segment where we explore some, let's say, creative possibilities. This is not financial advice, outrageous, but plausible trade ideas. What have you got for us?
All right. So given ARM's really strong momentum in custom silicon, and especially how they're picking up speed in automotive, here's an idea. A bit speculative, mind you. Consider looking into maybe taking a long position at a smaller, sort of under-the-radar auto supplier. One that specifically announced a partnership to build next-gen EV compute systems using ARM architecture. The theory is the market might be underestimating just how big a shift this is for car electronics.
Okay, so betting on an ARM-focused supplier in the auto space. How would you hedge that?
To maybe balance that out, you could consider a short position in a traditional big Tier 1 auto supplier. One that seems really tied to older chip designs and hasn't clearly shown how they're adapting to this custom ARM wave.
Interesting. Contrasting the old guard with the new potential challenger. What's your second idea?
This one builds on that Malaysia AI ecosystem partnership ARM mentioned. What if other countries decide they need their own sovereign AI capabilities built on something flexible like ARM? So the idea here is explore maybe a basket of very early stage AI startups located in Malaysia, specifically ones leveraging this new government push and ARM tech access.
Okay, that's definitely high risk, high reward, betting on a whole new regional AI hub.
Exactly. It's a play on that potential emergence. And for a hedge, maybe a short position against a large established Western AI infrastructure company. The thinking is, if these new national ecosystems pop up quickly, it could create unexpected competition for the incumbents.
Fascinating ideas, definitely thought-provoking. But of course, we have to say it loud and clear. This is purely for discussion entertainment, definitely not financial advice. Always do your own deep research before making any investment decisions.
Absolutely. So wrapping up, ARM's latest call really paints a picture of a company firing on all cylinders. It's fueled by that powerful mix of AI adoption everywhere and the continued success of their ARM v9 architecture. Their focus on enabling custom silicon and their wins in markets like automotive position them really well, it seems. And this whole idea of sovereign nations building ARM-based AI, that's definitely an interesting wildcard to watch.
So a lot to digest there from ARM's latest update. What were your key takeaways from this deep dive? What stood out most to you? We'd love to hear your thoughts. Join the conversation and let us know.